Now let us look at an example for increase in the scope of lease. We don't have an illustration in the institute material which covers only increase in the scope of lease. So therefore, I've drafted an own example to actually see how an increase in the scope of lease is actually accounted for. Let us assume that there's a property building which we have taken on lease which has 5 floors. All right, I've taken a lease of 5 floors in a building. The lease term is equal to 5 years. The payment is rupees 10 lakhs per annum and the incremental borrowing rate is 10 percentage. Let us assume that 2 years have passed by. At the end of year two, there is a modification that is taking place wherein two additional floors are now being taken on lease. I earlier had 5 floors. I'm now taking two additional floors on lease. So the total number of floors will be 7 floors. But the number of years that are remaining will continue to be 3 years. 2 years have passed, therefore remaining is 3 years. So for the period of 3 years remaining, I am going to have 7 floors on lease. The cumulative lease payment, let us say, is going to be 13 lakhs per annum. What do I mean by cumulative? What I mean is the original 5 floors plus the additional 2 floors, we are going to make a payment of 13 lakhs per annum. We will be now making a lease payment of 13 lakhs per annum. So therefore, the incremental lease payment that we're making for the additional 2 floors is 3 lakhs per annum. All right, the difference between 10 and 13 is the incremental payment of 3 lakhs per annum that we are making for this additional 2 floors. The question is basically how do we account for this modification? Now remember, in case of increase in scope of lease, we then had a subsequent bifurcation wherein we were required to check whether the additional consideration that we are paying, in this case the additional consideration is basically 3 lakhs, we have to check whether the 3 lakhs is actually the market rate of rent or is it at off market terms. Is the 3 lakhs is the additional consideration at market terms or is it at off market terms? So I have got scenario 1 wherein the additional payment, which is 3 lakhs, is commensurate to the standalone price, which means if the lessor actually gives these 2 floors on lease to any other third party also, he would be charging 3 lakhs only. All right, the 3 lakhs that he's charging from me, the same 3 lakhs he would have charged to any other third party also, and therefore the 3 lakhs payment that I am making is actually commensurate to the standalone price that lessor would have charged to any other party. That is scenario 1. I then have scenario 2 where I've assumed that the additional payment is not commensurate to the standalone price, which means let us say if he would have actually charged 4 lakhs to an external party for the 2 floors, he is actually charging a discounted rate or an off market rate for me at 3 lakhs, and the modification accounting will be different in case of scenario 1 and in case of scenario 2. All right, it's actually going to be different in case of scenario 1 and scenario 2. Let us actually take a look at how it's going to be done in the case of scenario 1. We're going to actually do the same steps initially, calculate the carrying amount of ROU asset and lease liability at the end of second year. Calculate the carrying amount of ROU asset and lease liability on the date of modification. All right, so let's start. For that, we first have to calculate lease liability on the date of commencement of lease. Lease liability on the date of commencement of lease, that is going to be equal to, we would have years. We had 1 to 5 years because it was a 5 year lease. The cash flow would have been 10 lakhs. We have present value factor, which was calculated using 10 percentage. The discount rate is 10 percentage. So we would actually have the present value annuity factor for a period of 5 years, which is going to be equal to 3.7908. And then we have got discounted cash flow, which would be 10 lakhs multiplied by 3.7908, which will be equal to 37 lakh 90,800. All right, so 10 lakhs multiplied by 3.7908 will be 37 lakh 90,800. This is the value of right of use asset and lease liability that would be recognized on the date of commencement. ROU asset and lease liability would be recognized at 37 lakh 90,800. So the carrying amount of ROU asset at the end of year two, carrying amount of ROU asset at year two is going to be the original value that I recognize at 37 lakh 90,800 less. I'm going to actually charge depreciation for a period of 2 years. The depreciation for a period of 2 years would be 37 lakh 90,800 divided by 5 multiplied by 2. All right, the per annum depreciation is 37,90,800 divided by 5. 2 years have passed by. Therefore, I multiply it with 2 to get the depreciation for 2 years. From 37 lakh 90,800, I reduce this depreciation for 2 years, which gives me 22 lakh 74,480. The carrying amount of the ROU asset at end of year 2 is 22 lakh 74,480. I similarly also have to calculate the carrying amount of lease liability at year 2. I have to calculate the carrying amount of lease liability at the end of year 2. For this, I am going to prepare the lease liability schedule. I will be preparing the lease liability schedule. So I will be having years, and then I will be having opening balance. I will have interest which is calculated at 10 percentage. I then reduce payments to get closing balance. All right. So we've got 4 columns. Now for year 1, the beginning balance is basically going to be the amount of recognition itself, which is 37 lakh 90,800. All right, at the beginning of year 1, I would have recognized 37 lakh 90,800. On that, I would have calculated interest at 10 percentage, which is going to be equal to 3 lakh 79,080. All right, so I recognize the lease liability of 37,9800. On that, I recognize interest at 3 lakh 79,080. I reduce payment of 10 lakh rupees to arrive at a closing balance of 37,90,800 plus 3,79,080 less 10 lakhs, which is going to be equal to 31,69,880. For year 2, the beginning balance will become 31,69,880. On that, I have an interest of 10 percentage, which is 3,16,988. I reduce payments of 10 lakh for year 2. I have a closing balance of 24 lakh 86,868. All right, my closing balance for year 2 is going to be 24 lakh 86,868. I have this as my carrying amount at the end of year 2. It's 24,86,868, 24 lakh 86,868. So the carrying amount of ROU asset is equal to 22 lakh 74,480. The carrying amount of lease liability at the end of year 2 is 24 lakh 86,868. Now, we are actually entering into an additional lease of 2 floors. We are entering into a lease for additional 2 floors, wherein we are going to make an additional payment of 3 lakh rupees. All right, because we are now going to make an additional payment of 3 lakhs, the first scenario is where this 3 lakhs is commensurate to the market terms. All right, the 3 lakhs is basically commensurate to the market terms. Where it is commensurate to the market terms, what the standard states is don't actually mess with the ROU asset and lease liability that you have. Don't mess with the current ROU asset and lease liability that you have. Assume that you are entering into a new lease contract separately. Yes, you are modifying the existing contract in real world, but for the purposes of accounting, because the additional consideration you're paying is commensurate to the market rate of terms, therefore do not mess with the ROU asset and lease liability that you have in the books. They are actually saying assume that you entered into a new lease and calculate the ROU asset and lease liability for that new lease separately. Don't mess with these numbers that you already have in the books of accounts. Calculate the lease liability and ROU asset, assuming that this is a new lease altogether. For accounting purposes, it would actually be a new lease altogether. When we are considering it to be a new lease altogether, what the standard is basically implying is we will calculate ROU asset and lease liability as present value of 3 lakhs for the next 3 years. The present value of 3 lakhs for the next 3 years, it is going to be discounted using today's incremental borrowing rate. We will be discounting it using today's incremental borrowing rate of 8 percentage. All right. So we have scenario one. Under scenario one, it is commensurate with the market rate of terms. Therefore, we are considering it to be a new lease. We are considering it to be a new lease. Therefore, we are going to actually calculate the present value of 3 lakhs, which is the additional consideration. Because it is a new lease, we are only considering the incremental payment. All right, we are considering the incremental payment for the next 3 years. So the next 3 years, we are going to make a payment of 3 lakhs. We will be calculating the present value factor at 8 percentage and the discounted cash flow. The present value factor at 8 percentage for the next 3 years is going to be equal to 2.5771. It's 2.5771. So the present value factor is multiplied by cash flow is going to be equal to 7,73,130. All right. So we are going to assume that this is a new lease. Therefore, we are not going to touch the ROU asset and lease liability that we originally have. We are going to recognize a new ROU asset and a new lease liability of 7,73,130. So it will be ROU debit 7,73,130 and credit lease liability of 7,73,130. All right. In essence, if you actually look at it, we did not even need these amounts. We did not even require these amounts because we are considering this to be a new lease. In a new lease, you basically take the incremental cash flows you're paying, which is 3 lakhs, multiply it with the present value annuity factor at the current discount rate, and we recognize an ROU asset and lease liability of 773,130. We are not touching any of these values. So this 24,86,868 actually represents the present value of 10 lakhs that is going to be made for the next 3 years. The present value of 10 lakhs for next 3 years, for year 3 to year 5, discounted at 10 percentage. All right. This, remember, this 24,86,868, we calculated it using the lease liability schedule. But in other words, this was also equal to the present value of 10 lakhs for the next 3 years at 10 percentage. We are not going to recalculate any of this using the current discount rate of 8 percentage. This 24,86,000 will continue to be as it is, and we are going to recognize a new lease liability of 773,130. We are going to depreciate the 773 over a period of 3 years. All right. Remember, the 22,74,480 was the carrying amount of the ROU asset at the end of second year. We would be depreciating this also over the remaining 3 years, and we will also depreciate the 773 over a period of 3 years. For calculating interest, 24,86,000, we would calculate interest at 10 percentage. All right. Reason being, we did not actually make any change to this lease liability. The lease liability continues at 24,86,000. Therefore, interest will be continued to recognize at 10 percentage on the old lease liability, but on the new lease liability, interest will be calculated at 8 percentage. Interest is going to get calculated at 8 percentage because the 773 was calculated by discounting it at 8 percentage. All right. So we are, for accounting purposes, we are assuming that 5 floors is one lease. The differential 2 floors is another lease, and both of them are going to have their own incremental borrowing rates. All right. We are going to calculate interest on the original lease at 10 percentage and on the new lease at 8 percentage. For accounting purposes, we are treating this as a new lease contract. So that is with regards to scenario 1. Now let's look at a case where additional payment is not commensurate to the standalone price. Let's look at scenario 2, where additional payment is not commensurate to the standalone prices. In this case, similar to other cases, we are actually going to calculate the revised lease liability. We will actually calculate the revised lease liability at the end of year 2. We are going to calculate the revised lease liability at the end of year 2. So we will actually have years where we will have 1, 2, and 3. 1 over here is basically payment for year 3, payment for year 3, payment for year 4 is basically 2 years away from today. We are standing at the end of year 2. So the payment for year 4 is 2 years away from today, and year 3 is basically payment for year 5. We then have cash flow of 13 lakhs each year. All right, we'll have a cash flow of 13 lakhs each year. We're not going to consider 3 lakhs, which is the incremental cash flow. We considered the incremental cash flow only where the additional lease that we are taking, is actually in on market terms. Where it is on market terms, we are assuming that the 2 floors is actually a new lease contract, and therefore we took the incremental cash flow. Over here, we are not assuming that this is a new lease contract. We're calculating the revised lease liability at the end of year 2 as the present value of the lease payments that we have to make. We have to make 13 lakhs of payments at the end of year 3, 4, and 5, which is 1 year away from 1 year, 2 years, and 3 years away from today. And we then calculate present value factor at 8 percentage. All right, we're going to take the revised discount rate, which will be equal to 1 divided by 1.08, that is 0.9259. 1 divided by 1.108, the whole square, is 0.8573, and 1 divided by 1.08, the whole cube, is 0.7938. All right. And then we have the discounted cash flow, which is going to be equal to 13 lakhs multiplied by 0.9259, which is equal to 12 lakh 3,670. The next year it's 13 lakhs multiplied by 0.8573, which is 11 lakh 14,490. And the third year it's 13 lakhs multiplied by 0.7938, which is equal to 10 lakh 31,940. All right, the sum total of this is going to be 1203 670 plus 11 14 490 plus 10 31 940, which is equal to 33 lakh 50,100. All right, so the revised lease liability at the end of year two that should exist in the books of accounts is 33 lakh 50,100. All right, I have a carrying amount of lease liability in my books of 2486 868. At the end of year two, I have 2486 868. Let me write it down. I have 2486 868. I have to have a lease liability of 33 lakh 50,100. Because I'm now making additional payments, my lease liability should actually increase in the books from 2486 868 to 33 lakh 50,100. Therefore, what I'm going to do is I'm going to increase my lease liability. All right, I'm going to increase my lease liability. Increase of lease liability is going to be 33 lakh 50,100 less 24 lakh 86 868. That is going to be equal to 8 lakh 63,232. All right, if I have to increase my lease liability, I basically need to credit my lease liability, which means I will debit ROU asset. All right, when I'm increasing my lease liability, correspondingly, I'm also increasing the ROU asset. All right, so it's ROU asset debit to lease liability of 8 lakh 63,232. ROU asset debit and credit lease liability of 8 lakh 63,232. I'm not sure why there's an issue. The screen is paused, but it's 863,232. All right, so that is how you actually account for a modification in case of increase in scope of lease, where we have taken a scenario of the incremental rent not being equal to the market rent. All right, the incremental rent is on off market terms. In that case, we take the total consideration and calculate the revised lease liability using the new discount rate, and we actually increase our lease liability from the current carrying amount to the expected revised lease liability, and correspondingly we increase the ROU asset. All right, remember, in three cases we have done exactly the same thing. Whatever we did over here, we did that in three cases. One was where there was a change in consideration. Where there was a change in consideration, there was an example where we actually had a consideration change from 1 lakh to 95,000. All right, we had a consideration change from 1 lakh to 95,000. What we did is we calculated the revised lease liability and we gave a corresponding adjustment to ROU asset. All right, although we took an example of a decrease in consideration, the same thing applies when there is an increase in consideration also. Even if it increases from 1 lakh to 1 lakh 10,000, we would have done the same thing. We would have calculated the revised lease liability and then we would have actually given a corresponding adjustment to ROU asset as well. The second was in case of an increase in the lease term, where the lease term actually increased, where there was an increase in lease term, we did the same thing. I think the example that we did was increase in lease term from 10 years to 14 years. It increased basically from 10 years to 14 years. The total lease term increased from 10 to 14. What we did is we calculated the revised lease liability and gave a corresponding adjustment to ROU asset. And the third example that we just did is where there's an increase in the scope of lease, an increase in the scope of lease, and the consideration is not commensurate. The consideration is not commensurate to the standalone price. All right. In this case as well, what we did is we calculated the lease liability and gave a corresponding adjustment to the ROU asset. All right. This was an example where we took 5 floors to 7 floors, but the incremental 3 lakhs is not commensurate. Therefore, we calculated the revised lease liability as the present value of the expected lease payment of 13 lakhs and gave a corresponding adjustment to ROU asset. The other examples that we did, I'm just summarizing the other examples that we did. We just did increase in scope of lease where We took increase in scope of lease, and consideration is actually commensurate. The consideration is commensurate to the standalone price. So in this case, where it is commensurate to the standalone price, what we do is we assume that the additional lease, the additional 2 floors that we have taken, is basically a new lease contract. All right. In reality, we only have one lease contract for 7 floors, but for accounting purposes, we don't touch the existing 5 floors ROU asset and lease liability. We assume that this 2 additional floors is an additional lease that we have entered into, and therefore we recognize ROU asset and lease liability afresh. We calculate the lease liability as the present value of 3 lakhs discounted at today's market rate or today's incremental borrowing rate to calculate the ROU asset and lease liability. All right. So we are considering this as an additional lease. We don't touch the balances of the existing ROU asset and lease liability. The other examples that we also did was we saw a decrease in lease term. We saw a decrease in lease term. We didn't have an institute example, so we actually took our own example of a decrease in lease term. All right. So in case of a decrease in lease term, we actually saw that the term reduced from 10 years to 8 years. All right. The term reduced from 10 years to 8 years, and the remaining life reduced from 5 years to 3 years. All right. The remaining life reduced from 5 years to 3 years. This was basically a 40% decrease. All right, what we did is we de-recognized ROU asset by 40 percentage, but we did not de-recognize lease liability by 40 percentage. We basically calculated the amount of payments that we are no longer obligated to make. We are no longer obligated to make the payment for year 9 and 10. Payment for ninth and 10th year was what we were no longer obligated to make. We calculated the ninth and 10th year present value payments at 10 percentage, which was the incremental borrowing rate at the time of commencement. All right, this present value of the payments at 10 percentage that we are no longer required to make was equal to the derecognition amount. After derecognition, we recognize the gain or loss. When you derecognize ROU and lease liability, you have a balancing figure of gain or loss. After doing that, we had part 2. Under part 2, what we did is we calculated the revised lease liability using the updated discount rate. We calculated the revised lease liability for year 5, year 6, 7, and 8 using a discount rate of 11 percentage, if I'm not wrong, right? We calculated the present value of the payments for the next 3 years, year 6, 7, and 8, using 11 percentage, and we then compared the carrying amount after derecognition with this revised lease liability, and then gave a corresponding adjustment to ROU asset. All right, the carrying amount of the lease liability after derecognition, compare it with the revised lease liability, and then you actually give a corresponding adjustment to ROU asset. And the sixth case that we actually saw was basically a decrease in the scope of lease. We saw a decrease in the scope of lease where 5,000 square meters basically became 2,500 square meters. All right, 5,000 became 2,500 square meters. So there was a decrease of 50 percentage. Percentage change was actually equal to 50 percentage. And therefore, in this case, as a shortcut method, we were able to derecognize ROU asset and lease liability. We were able to derecognize ROU asset and lease liability by 50 percentage as a shortcut method over here. All right. So we after derecognition, we recognized gain or loss. That was part 1. And under part 2, what we did is we calculated the revised lease liability as the present value of the lease payments that we are expected to make. 30,000 was what we were expected to make for a period of 5 years. That was our revised lease liability. We compared that with the carrying amount after derecognition, and the differential adjustment was given to ROU asset. All right. So under 5 and 6, we broke down the modification accounting into 2 parts. Part 1 was about derecognizing existing ROU asset and lease liability, and part 2 was where we wanted to bring the carrying amount of lease liability after derecognition to the revised lease liability. All right, under part 2, what we do is we compare the carrying amount after the derecognition in part 1 with the revised lease liability, and whatever is the amount, we give a corresponding adjustment to ROU asset. All right, so under 5 and 6, we actually have 2 parts of modification accounting. We break the modification accounting into 2 parts. All right, so with that, we are actually done with all the 6 cases. All right, there is one illustration in the institute material where we are actually going to combine increase in scope of lease and decrease in term. All right, we are actually going to combine part 3 and part 5, increase in the scope of lease where the consideration is not commensurate, and we are going to combine it with decrease in lease term, and we are going to see how the accounting is going to be done in such a case. All right, we're going to actually see how the accounting is going to be done when there is two things that are happening parallelly. All right, so that's it for this lecture. Thank you. Bye bye.